XRP just touched $1. Not broke through it, touched it. And that one number is splitting this community right down the middle right now. Half the people watching are quietly panicking. The other half are loading up. So before you do either of those things, let's actually look at what the data says, because the chart, the on-chain numbers, and what just happened in Japan are all telling a story that most people are completely missing. Last Friday was a rough one for XRP holders. The price hit exactly $1, and that wasn't random noise. It was driven by real macro pressure. The May Personal Consumption Expenditures Index dropped on Thursday, and it came in hotter than expected. This is the number the Federal Reserve actually cares about when it thinks about inflation, and it just posted its highest reading since 2023. Markets interpreted the stronger inflation data as reducing the likelihood of near-term rate cuts. And when that expectation shifts, money flows out of speculative assets. Crypto feels that immediately. What made Friday's drop hit harder was the fact that XRP had already been sliding for 3 days straight going into it. By the time we got to the dollar level, sellers had already worked through the week, and along the way, price passed through a zone that matters a lot on-chain, $1.06, where over 830 million XRP had previously been transacted. That's not a coincidence number. That's where real buyers historically showed up. The bulls tried to defend it. They couldn't. And that's when the dollar level came into play. Here's what actually surprised people, though. XRP didn't break. It bounced. Right off that dollar level on Friday, buyers stepped back in, and by Saturday the recovery was already underway. As of right now, XRP is trading around $1.07, up about 3% in the last 24 hours. That's not a massive move, but it's meaningful because it tells you that buyers were positioned right there at $1.00, ready to act. That kind of price behavior at a major psychological level is worth paying attention to. Now let's talk about where things actually go from here, because that's what everyone is trying to figure out. There are 3 genuinely different paths this plays out on, and they depend on what happens over the next few sessions. The first path is the one that bulls want. The current rebound keeps going. XRP pushes back above $1.06, and that zone where 830 million coins changed hands becomes support again rather than resistance. If that happens, you've got a recovery setup forming. The buyers who came in at $1 have a profit cushion, and that kind of momentum can build relatively quickly in this market. The second path is slower and probably more realistic given the macro backdrop. XRP doesn't crash, but it doesn't run either. It grinds sideways between $1.00 and $1.10, digesting the recent drop while the broader market waits for a reason to move. Consolidation phases like this tend to feel uneventful, but they serve a real purpose. They flush out weaker positions and let steadier buyers build at stable prices. Breaking out of that range one way or the other typically needs a catalyst, and there are some legitimate candidates worth watching as we move through the coming weeks. The third path is the one that hurts. If XRP loses the dollar level on a retest and closes below it, the on-chain data is fairly specific about where the next meaningful buyers have historically shown up. The first real support cluster sits around $0.80, where roughly 923 million XRP were transacted. Below that, 0.62 is the next major zone. Over 1.16 billion XRP changed hands there, making it the largest volume cluster in this entire support range. Those levels have historically attracted significant buying activity, although future market behavior can differ. And $0.51 is the final backstop, with another billion-plus XRP transacted historically. These are where real capital previously entered the market, not chart patterns, not guesswork. While the price action has been noisy, something quietly happened in the XRP ecosystem this week that tells a more grounded story about where things are developing. The XRP Ledger now holds more RLUSD, Ripple's dollar stablecoin, than Ethereum does. Total RLUSD on the XRP Ledger crossed $810 million, while Ethereum sits at $760 million. Stablecoins represent real capital that people are actively using to transact, settle, and move value. When more of that capital flows through the XRP Ledger than through Ethereum, it's a signal about where actual usage is happening. Although stablecoin supply alone doesn't necessarily predict future XRP price performance. The Japan news is what deserves more attention, and it's getting the least. The Japan Financial Services Agency has officially approved RLUSD under Japan's Payment Services Act as a recognized electronic payment instrument. Japan doesn't hand these approvals out easily. The country has a deeply established financial sector and a regulator that moves carefully and deliberately. Getting that approval means RLUSD cleared a serious compliance bar, and it may help expand access to one of Asia's largest and most sophisticated financial markets. The distribution channel in Japan is SBI VC Trade, backed by SBI Holdings, a firm managing hundreds of billions in financial services across Japan. Both institutional and retail customers will have access to RLUSD through that platform. That means this isn't just a headline, it's actual infrastructure for real-world adoption. When a stablecoin tied to the XRP ecosystem becomes available to everyday Japanese consumers through a mainstream financial firm, that's the kind of ground-level growth that takes time to show up in price charts, but tends to carry weight over the longer term. So here's the honest read on the situation right now. The short-term picture is genuinely uncertain. Inflation is sticky, market expectations around Fed policy have shifted, and investors are in a cautious mood. That's real headwind. But the things developing underneath the price chart, RLUSD adoption, regulatory wins in major markets, on-chain volume growth on the XRP Ledger, are moving in a different direction. The fundamentals are building at a time when the price is being pressured by macro factors that aren't specifically about XRP or Ripple. That kind of gap between price and fundamentals is something worth keeping track of. What you want to watch going forward is fairly clear. Can XRP hold above $1.06 and turn it into support? If yes, the first scenario gains traction. If that level keeps rejecting price, the consolidation scenario becomes more likely. Keep an eye on the RLUSD supply data on the Ledger versus Ethereum. If that gap keeps widening, it suggests real capital continues moving toward the XRP ecosystem, regardless of short-term price movement. And Japan's rollout through SBI is worth tracking, because early adoption data there will be an early read on whether this regulatory approval translates into actual usage on the ground. The dollar level held. That's the headline. Whether it holds again on the next test is the real question, and the answer to that question could influence XRP's short-term price direction over the coming weeks. None of these scenarios are guarantees, and market conditions can change rapidly. Stay close to the data, not the noise, and we'll keep breaking it down right here on XRP Financial Horizon.